Shots fired at ETHDenver. We are talking about the Battle of the Titans today, and you are not going to want to miss it, so stick around. I do want to thank our sponsor today. It is, of course, BTCC. You guys can get in and very easily start your trading journey over there. Do a lot of different things, including copy trading, shorts, longs, you name it. It's all available over on BTCC. Using our link down below, you're going to get a 10% bonus on your first-time deposit, so take advantage of that. Get out there while these markets are volatile. Now is the time to be able to get in and make some of these swing trades or possibly go into some of these longs or shorts, depending on your assets. So check it out. Use our link down below. Let's go over to the leader. And of course, the leader right now is Robinhood. The thing that has happened with Robinhood is they, of course, announced the new chain that is going to be driving all of their growth. And when you look at just already, we've seen a whole slew of different projects coming in. And of course, one of them was Stonk Exchange, and that of course is centered right there around Uniswap v3 as a concentrated platform. So this will be interesting to see more developers coming into this, and how quickly do they come in? That's the thing that everybody's wondering. If you look at the chain testnet stats, you can go right over here to active accounts. In just a short period of time, they cracked 100,000 active accounts. To me, that's pretty significant during this time. When you look at the market being as depressed as it has been, and Robinhood comes out and drops this into the industry, and I think has done a really good job in making it known. Let me go to a clip, because this was Johan of Robinhood talking about their success. Take a look.
We launched it last week. The response so far has been super good. Almost 1 million wallet created on the testnet, 4.5 million transaction, and it's been super fun to look at what people have been building, the developers. You know, it's just the beginning. It's not even been a week. We saw a perp stacks, we saw spot decks, obviously. Some people are starting to build things around it for yield and lending. So far it's been pretty fun.
Do you think all of those people are Robinhood users, or they're crypto people that want to get into Robinhood's chain, or it's a mix?
I think it's a mix. The idea that you can get 26 million using it is pretty exciting. So I understand why, you know, some people are building.
Yeah.
All right, so let's be honest. This is really about distribution. It has been always. Anytime you have developers going out, they have to have distribution. One of the things that has really centered around distribution and successful distribution in the past was, of course, the partnerships that Base was doing with a variety of different L2s. One, of course, was Optimism. This is kind of a funny graphic with Optimism. Yeah, you're still, see you later. And that was the case. Optimism, of course, after the situation where Base has stepped away from OP, plunges double digits. This is a problem because it starts to center around other use cases on Optimism that may end up leaving the chain, with Base, of course, exiting. Because remember, just like that last clip, the key here for Base and a lot of these partners was the distribution that Coinbase would offer and bringing it out. So that is a huge problem, I think, for OP in general. Optimism lost 94% of the superchain revenue overnight. Base generated 6.8 million monthly and now keeps all of it. So Optimism mainnet does 160K. So they granted Base 118 million tokens worth 175 million at signing. The point is this was not a great deal for OP. I think this is a problem going forward. And I think the issue right now is a lot of these L2s, if you don't see the writing on the wall, then you probably should start paying attention here, because I anticipate, and I think most everybody else does, is these chains are going to start to migrate into the platforms for distribution, just like what we're seeing right now with Robinhood. Other things, of course, you got to look at, and that is, of course, and yes, ZK is inevitable. They are moving from optimistic to ZK proofs. That'll be the future of where Base is going. There was an interview at ETHDenver, and it was with Jesse Pollack. And if you guys know, he is basically the architect for Base, and I think pretty much the dev front guy, the guy who's getting projects to connect to Coinbase and the Base chain. But of course, they had some very interesting things to ask him. Take a look.
There are hard parts as a builder to deal with the trenchers. You've been getting kind of beat up in particular about like trading and focusing on trading.
Right? It's been on Solana, but I think that we've honestly been slowed down by that cultural bias. Candidly, I'll be the first to admit that I actually started with a similar bias. Like I've never been a trader, and I think that caused me to almost like lack some empathy of, what do traders want? What are they seeing? And then not just what do they want and what are they seeing, but also what value are they bringing to the economy? I think we under-focused on traders in 2025. I think my perspective is we need to solve that. We need to bridge the gap. I think the first place I approach it from is like, we don't have it figured out and no one has it figured out.
All right, so Jesse's response there I thought was terrible. It was a disaster, I think, in the sense of you have to focus on traders. That was the question that they had directly to him, is how you're not focused on the trenchers. And if you look at other chains that have been able to do that, Solana is a good example. They've been able to absolutely kill it. If you look at Base in general, of course, we know what's happening right now as the decline is occurring. And right now, the percentage, especially on active addresses, because now we're seeing Robinhood with their new chain accelerate in the first week. I wonder what this is going to look like in 30 days, 60 days, 90 days with Robinhood. We'll check back on that because I think that will give us a big indication of how things are going in this area. One of the big mistakes I think that Base made, and Coinbase in general, was virtuals. Virtuals did not necessarily get listed for some time. This would have been one of the key attributes, I think, especially in the prime time of what was then a bull market. And this was a post from October 24th. That's how long it took for that to actually go forward, where we saw agent tokens come live on Coinbase. That was a big mistake, and I think it is now showing why we didn't see the trenchers really start to adapt into what's going on with the Base chain. Let me go to another clip because this was Jesse Pollack also talking a little bit further about the strategy that they want to take forward on Base. Take a look.
Building a dedicated stack for Base, which I'm super excited about. It's going to let us scale more aggressively, equally secured by Ethereum. If I had one theme for 2026, it would be a year of like focusing on our customers.
Okay, so I don't understand that. I'm assuming that you're focusing on customers all the time. Maybe before it was, yes, you want developers, you want new projects. But I think now to focus on customers, that should, in my opinion, should have been the case all along. Speaking of developers, when you look at the Base chain, this is, of course, one of the presentations they did there. And the point behind this is a paid growth model for devs to get your product out in front of the distribution, which looks and feels a lot like, and if I remember correct, I thought this was going to be free for devs to be able to do this. But this looks a lot like what's going on over on Apple within their app store. So I don't know about this, guys. I'm very skeptical as to how this plays out. All right, so other interviews there at ETHDenver. One of them was with the Robinhood team, and they had some interesting statements about the Base chain. Take a look.
I'm going to ask you kind of like a bit of a spicy question, because there's a certain other exchange out there that also has a chain, and I don't think they fully executed well funneling their users to said chain. How do you think about funneling the Robinhood users to use this chain?
I have no idea which company you're talking about. No,
it's like they're here, so I'm going to play nice. There's a lot of general purpose chains out there, but I don't really think that's what Robinhood's going to be. It's going to be definitely financially aligned, right?
Yeah, we really want to do anything around finance.
When you take a look at what Robinhood has been focused on, they've had a very clear vision. It has really always been about democratizing finance. Here is what they had to say about this with the new plan. Take a look.
So democratizing private markets is very personal to me. And at Robinhood, we stand for access.
A higher portion of the value is accruing to a small group of wealthy individuals.
Fundamentally unjust that retail investors can have their choice of all kinds of asset classes, including meme coins, but companies like Databricks are not accessible to retail customers.
Agree with all of that, except the part about meme coins. I'm just giving you a hard time. I know you love them. We've been on this quest for well over 5 years now. We've looked under every rock, we've excavated every crevice, and we believe we found it. So introducing Robinhood Ventures.
All right, so one of the things they were talking about there is the venture fund. And the venture fund is basically a project that would allow you to invest in private companies for the first time. Instead of being an accredited investor like you mostly have to be with going into private companies, this would start to change that. That's exactly where they're going. And of course, they, I think, hit it on the head here in this clip about how big is this really? Take a look.
In a typical VC fund, management team would take 20% of the extra $1 billion of upside. Robinhood is doing away with the carry. Are they going to be able to do as well as the typical VC company does? My guesstimate to that would be that they're going to do even better because of Robinhood's exposure and Vlad in particular, and being in the heart of Silicon Valley, which is where a lot of these companies are often based from. And an additional thing that is, I can't tell you how fantastic it is the ability to be able to exit your investment in these private companies at any given time. Currently, I have multiple fund investments, and I'm probably never going to do this again. The opportunity for even rich people to invest in these private investment funds, it's still better to invest through the Robinhood fund. Another example of Robinhood innovating, just kicking butt, really being there for their customers and lowering the fees on all this stuff.
I'm in agreement with that because this is a problem. I'm a small business investor. I'll go out into businesses that are growing, and it's very difficult to get off of the cap table unless they sell or they're doing some sort of tranche of new investment rounds, and you can sell into that. The fact that you can do this now, or will be able to do this inside the venture fund, that is very enticing for people that have never, maybe people that have never done this, but I think even more so for people who have done this and have seen the problems of trying to exit a company. That could be a big deal. The fact that they're not taking it off the top, that's going to be very competitive to the VC firms in Silicon Valley. Man, Sand Hill Road, they're coming for you right now. Speaking of retail, one of the things that Robinhood has is a very unique angle on the data on what investors want, right? Well, here's Tom Lee talking about this. He's talking about this fund in general, of how he thinks it might do, especially when it comes to retail. Take a look.
Since COVID, retail investors have gotten a lot right.
I think the reason they get it right, they don't care about daily P&L as an existential issue. They're really working with permanent capital, like it's their money. So they're willing to own something for 2 years, 3 years. Today, most institutional investors have 30 days as their time horizon. 1 second or 5 seconds is considered a long holding period. So a lot of funds are literally just churning through stocks. Retail investors are just trying to find good ideas.
Institutions then have to sort of chase into it to keep up.
It's usually a battleground stock, like Palantir is an example, or Netflix that was heavily shorted by institutions but bought by retail. And then, as you know, a very famous one was GameStop. Even Tesla were battleground stocks where retail was a very big supporter. Institutions tended to use it as a source of funds. There is usually a break point and the stock can re-rate higher. I don't know. I've seen retail get a lot of names right. We're even debating whether to make it an investment product.
This will be interesting because if you think about retail getting a lot of names right, what he's talking about there, this could manifest inside of the venture fund with Robinhood, where you could see retail activity actually picking the winners and losers that institutions end up playing on later for liquidity, which is what he's talking about there. This is flipping the table for sure on how new age stocks and also how funds are going to be drawn in the future for sure. One thing that of course is unique and different around this year's ETHDenver was, guess who showed up? The SEC. Take a look.
Would anybody have believed that we would have the chairman of the SEC and a crypto task force?
What do you think about the falling crypto prices of late? Should we panic or should we even care?
What, has something happened during lunch that I don't know about?
Number go down is kind of the mantra of the moment, and some crypto critics are dancing in the streets about it. In this context, however, maybe we should call it something like ETH below three glee or ETH below 2 woohoo.
And legislatively, there's some concern that clarity may not make it through. In the worst case outcome, that we don't get it this year, what is the SEC's plan?
I think it will happen, and so
I do too, but let's say it didn't.
But right, so whatever. If it doesn't, as I mentioned, Mike Seelig is at the CFTC. We can draw these lines as between the two agencies, and we can work it out.
You have to build stuff that people want and need. That's the best way to garner support on both sides of the aisle in Washington.
Okay, the first part of that was a little cringe. Let's just call it a little cringe-worthy. Wrong place, wrong time, I think. But The point that we're getting to at the last, I think, was important. And that, of course, was, Paul Atkins right there said it out loud. Said, we don't really care. We're going to make this work anyway with the CFTC. He's talking about clarity and it going through. I think, though, now we're dealing with a clarity option that is much more possible happening very soon. So stick around for all that stuff. It's about to happen, guys, so get ready. If you like this video, hit like and subscribe, drop a comment down below, and also join our free private member group. The link is in the description.